Joining us now for Insight, we've got Jay Woods, Chief Global Strategist, Freedom Capital Markets. Good morning, Jay. All right. Where do we start? Okay, so we've got futures under some pressure this morning. They're off the lows, though. But last week, especially the end of last week, we had that big, massive sell-off, right? For the S&P 500, down more than 10% over 2 days. There has only been a few times that we've seen that before. The most recent was COVID. That was a health crisis that caused financial shock. We go back to GFC, 08. That was the first time I came down to the floor, actually. So that was a big move. 87, I was alive for that, but we weren't here for that. But help give some perspective on what this all means to our audience.
Yeah, I mean, this is a significant moment in stock market history if you want to get dramatic about it. But what does it mean? You have to know your time frame, first and foremost. Take a deep breath. Have that shopping list ready. I've got mine right here. We are now, this is different. Every time it's different. So I can look at the charts and try to put it in a price perspective, which I do. But right now, we're at the whim of Washington. This is a man-made, self-inflicted crisis. I don't care what anybody says. This could have been
a lot of people agree with you that
some people on other networks may not agree with that. And, I have a lot to say about that. But this can change like that with one tweet. So we are in this watch the tape, but what you have to do is you have to think about the long term and honestly the short term, because under the 200-day moving average, during crises like this where the VIX is now at 49, where it's spiking, and I talk about the VIX where we've seen it over 40, these are opportunities. The RSI is at historically low levels for the relative strength index, a reading of oversold. Sentiment is at lows. These are contrarian indicators where you are near a bottom. How this bottom forms, to be determined. We have tax day part 2 on Wednesday the 9th. Let's see if it gets pushed back. If it gets pushed back, I think we're going to rally probably 5%. So be ready.
So if that deadline of April 9th gets pushed back, because there's an April 9th deadline, and then for China is April 10th. You think there's the potential for that to be pushed back, or just be nimble for the potential for anything to happen from Washington, I suppose?
I mean, definitely be nimble. I've been buying stock on the way down, and I've been stopped out. So if you are buying stock now, trying to catch that falling knife, it is a dangerous exercise. But if you get near that low, if you're looking for the long term, I thought Broadcom was great at 164. I was out at 161. I got back in at 142, but guess what? I'll probably get out at 137, 136, but I'm up a little bit money there. Just looking at those as small examples. So I have a shopping list. I'm ready to buy Sherwin-Williams, AT&T, Amazon, NVIDIA, JP Morgan. I have lower bids just in case this accelerates. So you look at things on a weekly time frame. I know Kevin was talking about that earlier.
About being tactical, especially if you're a longer-term investor. And you put this all in perspective. If you have a 10-year horizon, and maybe if you have an even shorter window, but still long-term, being tactical.
If I'm 65 or older, I'm concerned, and if I don't have a strategy where I am, not heavily invested in cash or safer assets, I'd be concerned. But for somebody, 55 and younger, we will get through this cycle. The question is, how bad does it get now, and how long does it last? When I looked at VIX spikes, there was only one that lasted an extended period of time, and that was during 2008, where it spiked over 80. It had a near-term low. We did rally, so it was a great trading environment, which sounds horrible, but I know a lot of traders that did very well during those volatile times. But we didn't bottom until 2009. The other times, just as recent as August 5th during the Japan yen carry trade, spike. That day was the low. I don't know if this day is going to be the low. I would have liked to have seen more of a washout. Now we're watching bear market territory at 49.02 in the S&P 500. That will make headlines. We break 5,000. That will make headlines. But if you look at back on a weekly time frame, around 46.70, where's my level? 46.74 on the S&P 500. Those trading the Qs. 378 on a weekly time frame. These are the 200 weekly moving averages. These are areas that historically, if you buy there, if it gets there, let's hope it doesn't, that you'll be much better prepared going forward over the long term.
Jay, let me ask you, how I like that you're giving opportunities and tactical opportunities to our audience here. But how does calm come back in? Because you talked about the VIX, and you also talked about how each time is different. But one thing that has been similar has been volatility, especially the VIX, and pay attention to that with each of these time periods. I noticed some people, and this is anecdotally, who are so frightened and selling positions in their retirement accounts, and you can tell they're not the ones who are, near retirement age. They have much longer to ride this out. How do you, I guess put this all in perspective. I mean, because we came back from 2008, we came back from COVID. Put it in perspective for our
Well, when
audience.
you live through these things, it's awful. This is not fun. Down 10% in 2 days with another sell-off on the horizon, and that word of the year, uncertainty, plaguing us. You just have to have faith that the U.S. economy, that these leaders, these 500 CEOs of the S&P 500 companies will push back, get things right, and will come to some sort of global trade agreement that gets us back on track. But right now, these numbers, if you did the math, this formula, it was all wrong. Are we going to admit we made a mistake? Egos are getting in the way, and that is not good, because the American investor is the passenger on this train wreck right now. And if we can't get back on track, there's going to be some more pain before we can get some of those gains back. So it's a troubling time. I do have time, and as an active trader, I'm using stop losses very quickly. So I am having little losses again and again, waiting for that one tweak that's going to get us back. But if we rally back, it's not back to new highs. Watch 5,500 in the S&P 500. Old resistance becomes
new highs.
Old support becomes resistance, and I reverse that. And that 200-day moving average starting to flatten out, roll over. It will take us time. What I hope is we can find a near-term bottom. We will have a V-shaped recovery given the speed of the down cycle, but I don't think we're going to make that full V. It's more of a W than anything else.
Okay.
So,
It'd be interesting to see if that comes to pass.
Or pi sign, how it goes this way and then across.
That's fair. Because I do remember during COVID it was V, and we thought it was going to be a W, but it wasn't. But we also had a lot of stimulus that came into and kind of fueled.
Well, and that brings in the Fed, and now Jerome Powell has basically said this could be transitory. He set this up beautifully. This is going to be transitory with the tariffs. Well, the tariffs, as he said on Friday, were much greater than they anticipated. So he basically gave the administration rope. Unfortunately, they're hanging themselves with it.
All right, Jay, thank you. That's Jay Woods, a senior global market strategist, Freedom Capital Markets.